Hey there, Eric from 5minuteinvesting.com. And today I want to talk about the one thing that makes technical analysis work. Or in other words, the technical analysis fallacy. Now before we start, it's very important to keep the big picture in mind. That investing only has three steps. One, find great company. Second, buy at a discount. And third, use stock options to multiply your profits. And that's all there is to investing. So, the topic of the day, the one thing that makes technical analysis work. And before I answer that question, it's very important for you to know why it doesn't work and what's the limitation of technical analysis. Now, when I'm talking about technical analysis, I'm talking about indicators, oscillators, basically any indicators that relies on price data. Now, there's a lot of different sources of data in the world, and I used to think technical analysis is the answer. And I think that all the information is reflected in the price, and you don't need to go out and obtain any more information because it's all on the chart, right? You can just look at the chart, look at different time frame of the charts, and use different types of indicators to know everything and to make investment decision. But boy, I have never been more wrong. And I was really wrong because I keep believing that technical analysis was the holy grail until I meet a hedge fund manager. Now, this hedge fund manager is one of the most successful funds in Canada, and I asked him, why don't you just use technical analysis? If anything, all the information would be reflected in the chart. And at this point, the analyst, who is one of my friends, was like, well, but it doesn't encompass all the information. For example, I'm about to do a field visit at my target company, which is a casino right now, and they recently did some renovation. And now this information, the quality of the renovation, how well they did the renovation, what kind of customers they're targeting with this renovation, wouldn't be reflected in the chart, or at least not immediately. So what does this mean? Well, I'm not telling you to go out to every single company that you're trying to invest and see how they're doing, which is, by the way, a great idea. And if you have the time, you should totally do that. But what I'm saying is there's more information outside of technical analysis. And it's very important to keep that in mind. For example, the company's earnings, the company's books, news, new product launches. There are a lot of factors that are actually not captured in price. What the price captured is people's expectation of what they think will happen. So for example, if I'm an investor and I think Apple is going to launch a new iPhone and it's great, so then I buy. But then it actually doesn't mean if the iPhone itself is good or not until it is launched. So it is up to you to go out and survey, to do your research from other sources of information to validate the charts, to validate the technical analysis. Technical analysis is great to use as a starting point, but it's not the final tool you use to make your investment decision. The final tool you use, which we will cover in later videos, can be maybe news, maybe a particular bad event that happened that will be resolved, or maybe it's something like a new product launch, new movie come out that will boost the company's revenue. So yeah, use technical analysis, but you don't want to rely too much on it because there's an inherent limitation. And one more thing, when you look at technical analysis, all the indicators are basically grabbing data from the price, whether you take the price data and divide it by half and times it by 2, or you take the price data and put it through a very complicated computer learning model to try to identify patterns, which I actually have done before. Either way, the common denominator is price. So if you want a good, successful investing strategy, you need more information than just the price and the change in price alone. No matter how much information you have about price, historical price, do you really think you have predictive power? Do you really think you can predict the future by just looking at the past movement of price alone without anything else, without looking at the fundamentals, without looking at the news, without looking at the big players and what they're doing? And after years of research, my conclusion is that you need more information than just price itself, which is what the hedge fund manager taught me. So yeah, good luck. Leave me a comment below if you have any questions. I'll be happy to answer them, and give me a like or a share. I always love those. And in the next video,